Homegrown Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us here at ausbiz. Let's check what happened overnight. Global stocks rallying after lower than expected US unemployment claims eased recession fears while treasury yields and the US dollar rose along with gold and oil. Well, US stocks surged on Wall Street with the big tech stocks boosting the Nasdaq and the S&P 500 while the small cap Russell 2000 also rallied. Nvidia, Meta and Tesla were the standout gainers, and shares of Eli Lilly jumped after raising its annual profit forecast, and sales of its weight loss drug Zepbound crossed $1 billion for the first time in a quarter. News Corp beat estimates for fourth quarter revenue driven by a strength in its Dow Jones unit and gains in its Australian real estate business. Revenue in the quarter to the end of June rising 6% to $2.58 billion. Locally listed REA Group posting a 37% increase in revenue of $305 million, helped by price increases and a rise in national listings. Paramount Global has written down the value of its cable networks by nearly $6 billion, while the company's streaming business reported its first quarterly profit. The impairment is a result of shrinking audience for its cable TV networks, which has led to lower advertising revenue. Shares of Under Armour surged after the sports apparel maker posted a surprise first quarter profit, benefiting from its efforts to cut inventory and as well as promotions. Well, the number of Americans filing jobless claims fell more than expected last week, easing fears that the labour market in the States is worsening and the US economy is heading into recession. Initial claims fell by 17,000 to a seasonally adjusted 233,000. That is the largest drop in almost 11 months. Meanwhile, Richmond Fed President Thomas Barkin has said his conversations with business leaders suggest a slowdown in the labour market is due to slower hiring rather than job cuts, which will give the central bank time to work out its next move. He said you've got some room to see more on the labour side, you've got to see more on the inflation side. I'm actually pretty optimistic that over the next few months we're going to see good readings on the inflation side. Well, US Treasury yields rose following the data, while muted demand for a 30-year bond auction helped boost yields. The 2-year rising to 4.04%, the 10-year is up to 4%, and the US dollar has strengthened most prominently against the yen, while the Aussie is trading around 1% higher at 65.9 US cents. Well, let's get across what is moving markets, particularly with a focus on the States. Brad Gastwirth joining us from Unearthing Opportunities. Brad, very good to catch up with you again. So what a week it has been on markets. And a lot of that triggered by what we're seeing in US jobs. Once again, that was the case overnight. How would you describe those moves we're seeing in equities?
Yeah, Andrew, first, thanks for letting me be here again. Yeah, a little bit of volatility in the US. I mean, today, I think what was the best day in a few years. We've seen incredible volatility here in this August month. I think it's going to continue, especially as we get a little bit closer to the election. But ultimately, I mean, we saw very mixed economic data over the last several days on the job side. That added some fuel to the rally. The biggest, eye watcher right now that's getting a lot of attention is inflation, and all eyes are on inflation right now to see where that continues to shape up. But yeah, Andrew, I mean, incredible amount of volatility here in the States.
Well, in fact, we're going to get some inflation reads next week. So you would then anticipate that markets are going to continue to be volatile as they adjust and respond to those readings.
Yeah, absolutely. I think there's, right now we're really, chasing economic data. I mean, there's some really concerning things on the macro side that we cannot ignore, especially the tensions in the Middle East. I think we're going to see something imminent from Iran. How much that spooks markets, it depends on how big that response will be. I expect oil to see a nice sharp rise higher in the near term. I mean, it's very intuitive. It's not really anything different than what a lot of people would expect. But I think you still would see a very nice move in oil higher, given these tensions, and I expect something pretty large scale from Iran. So the macro side is still something we can't ignore. The U.S. economic front is really what's driving these markets right now. And to your point, yeah, we'll get a little bit of an update on the inflation, but right now it's a day-to-day moving target with some of these economic numbers.
Brad, what are you watching for there at home in the States, with obviously markets concerned the prospect of a recession? You're seeing. What? No, I was just going to say, as far as you've made a point here of household debt reaching record levels. So, I mean, clearly the U.S. consumer is under enormous pressure.
Yeah, and so Andrew, it's a really good point, and thanks for bringing that one up, because the consumer, we're spending, right? So it's quite strange here in the States. You're having an increase, a significant amount of consumer purchasing going on, but it's really coming from the credit side. So you're seeing like debt increasing significantly, and now you're seeing delinquencies increasing, significantly. It's something that I've been bringing up, time and time again as well, and it's something we can't ignore. Although the U.S. has always been a purchasing country, right? Like we've purchased and have very high debt levels compared to a lot of other countries out there. But right now, there's some really concerning levels. I think what I'm taking a look at to answer that initial question, I want to see really, some of the profitability numbers that continue to come through earnings season, what we're seeing with artificial intelligence and how that's really shaping corporate earnings. That's not going to slow down. If anything, it's going to accelerate, which is very positive for the stock market, given companies trade mostly on financials. So you're going to see financials over the next year or two much better because of efficiencies driven by technology, and that's going to continue. On the macro side, Andrew, I mean, there's so much to pay attention to. The one thing that's interesting is if we look back over the last few years, there's been some major macro news that the global markets have completely ignored. So will they ignore some of these tensions in the Middle East? I think it depends on the scale. I do expect a very large scale attack or involvement by Iran. I expect that to spook the markets initially. I think that will, time will tell to see how the markets sort of digest it. But in that case, the trade is oil. It's going to tick higher. It's an easy trade from here.
Well, and I imagine you throw gold into that bucket as well.
Absolutely, and obviously, my stance on the precious metal side. I continue to like gold and silver, and even in that positive market, we saw gold tick higher as well. So I think it's still a safe haven. It's a great asset to continue to invest in, and I have no change to my thesis over the next several years that gold is continuing to perform quite well.
So, equity-wise, Brad, just how bullish are you on the US market at the moment?
So I'm still quite bullish. I mean, I do think you will likely get a rate cut, sooner rather than later. I think when we do get the cut, it's more fuel. I think you're still going to see better earnings numbers and profitability. The harder gauge is really like numbers from sell side analysts have really increased significantly, and they've been, most sell side analysts have been completely wrong. They've had some directionally accurate numbers, but most are just way off in terms of where actual numbers are going. So I still see a lot of really great improvements. The concern that we'll have in a few years from now is this bifurcation of really the rich and poor that's happening more so here in the States, because you're going to get rid of a lot of middle class jobs over the next, call it, 3 to 5 years with what's happening with robotics and AI. But that being said, there's still on the corporate side, things are going to look good. It'll be interesting to see how this plays out in a longer term nature, but I'm very bullish here in the near term. I still think dip should be bought, and I still expect higher, new highs to happen by the end of the year.
And Brad, we were talking earlier there about that pressure the US consumer is under. Interesting, we did get some results from Disney this week. It has actually lifted prices, but and they've largely been absorbed by customers, it would seem.
Yeah, and another great point here, Andrew. I mean, if you're looking at some of these companies here in the States, Disney's a great example. They're increasing their subscription cost. If you look at like a Costco, they just increased their subscription to their membership cost. and that's just going to add to profitability for these companies. And I mean, Disney has been one of the laggards over the years. I like the positioning here. They have great assets. I still think content is king, and that increase in price, it's minimal on the dollar, on the absolute dollar, it's a few bucks, but on percentages, it's very high. So I like the move. It's positive for the stock, and the stock reflected that.
Brad, great to catch up with your view from Unearthing Opportunities. Thanks for joining us.
Thank you, Andrew.
All right, let's focus on the local market just before we get going at the open. As you can see, looking for a very positive start, I should say, with SPI futures up more than 1%. Of course, also focus on earnings results. We do have a number of them this morning that we'll get across, including News Corp and REA Group, as well as Life 360 and QBE on the insurance front. So stay with us because the open is just a couple of minutes away.